of maize flour. Perhaps it's a big hotel which has got like 20 outlets in Kenya. During the year, what happens? COVID comes, hits the economy terribly. Hotels are called upon to close. So meaning that, ladies and gentlemen, the actual number of kgs of this maize flour that will be used will differ from what we had forecasted. Nobody had forecasted that by this kind of, at such a time, we were to have COVID. So we had budgeted for a good year, the whole year. But COVID at the middle, right at the middle, COVID comes. So makes the actual to be what year? Different. Ladies and gentlemen, this lady called Beatrice has given us something very nice. She's told us that a variance basically is a deviation. Deviation means you take what we call the expected, what we shall be calling the standard. So standard minus what here, somebody? Minus the actual. Standard minus the actual. I like that. Now, we have got 5 types of variances. Don't forget that. We have 5 types of variances. We have 5 types of variances. Could you kindly remind us these 5 types of variances? Remind us these types of variances that you're talking about. The major types of variances. Who is able to remember them? Tina says material cost variance. That is a section 2. Student of ours, labor cost variance. Who else has something for us? 5 types of variances. Remember, we have 5. You've only been able to give me 2. Labor, no, don't go to the components. I want the major types of variances, of which you've told me material cost variance is the first one. The second one you just told me, we have a labor cost variance, labor cost variance. So the third one, what do we have there, somebody? The third one, what do we have there, somebody? Fixed overheads, cost variances, I like that. Fixed overhead, cost variance, I like that. Sales variance. But you see, before you go to the sales variance, we have 2 types of overheads. We have variable overhead and we have fixed overhead. So you should talk about 2 types of variances under the overheads. So you should talk about variable overhead cost variance and the fixed overhead cost what year variance. So 5 types of variances, ladies and gentlemen. We are repeating them very fast as you guys write. We have the material cost variance. Number 2, we have the labor cost variance. Number 3, we have the variable overhead cost variance. Number 4, fixed overhead cost variance. Number 5, sales variances. Number 5, sales variances. Now we will go to each one of them one at a time. We start with material cost variance. 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 Material cost variance is what we abbreviate as MCV. MCV, material cost variance. We abbreviate material cost variance, material cost variance as MCV. MCV is material cost variance. Material cost variance is divided into 2. Material cost variance is divided into 2. We have the material price variance and then we have the material usage variance. We have the material price variance. Please write those 2 components. We have the material price variance and then number 2, we have the material usage variance. Material price variance and the material usage variance. Now, I would want to see whether my students, especially the section 5 students, have been reading these variances since we did it. We did the topic. Who is able to remember the formula of material price variance? That ball, I'm throwing it to my CPA section 5 students. So my CPA section 5 students should be able to tell us, ladies and gentlemen, Is there somebody who has been able to write the formula there? And please, if you're not a CPA Section 5 student, don't write, because this ball has been thrown to the rightful owners. Section 2 people will be coming back to you. This is for material price. It's for Section 5. And I want them to write for us the material price variance. 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 All of them are forgotten totally. Ladies and gentlemen, that formula is okay. However, we don't prefer putting it that way. If you want us to give you the material price variance, material price variation, we've got two prices, remember. There is the price that we began with at the beginning of the period, thinking that it is the price that was to be used in the year. What we call always start with the standard. So we have the standard price minus the actual price. Standard price minus the actual price minus the actual price. So we have got a difference between these two prices. Standard price minus the actual price. Outside here multiplied by the actual quantity that was done what year? Purchased. So please write in full that SP is standard price of materials per kilogram. Standard price of materials per kilogram. And then AP is the actual price of materials per kilogram. Per kilogram. And then this AQ is the actual quantity or actual number of kilograms or actual number of kilograms. And I would want us to make reference straight away to our past paper question. And I would want us to start off by looking at section 2, MA's past paper question, which was tested in which sitting, my admin? That sitting was it September? September 2015. If you have your past papers, let's go to September 2015, question number 2, boy. September 2015, question number 2, boy. Those of us who do not have the past papers, I had prepared this past paper for you. The question is displayed there on the screen. The question is displayed there on the screen. So they're telling us A Limited operates a system of standard costing. The following information is available. For the month of July 2015, actual cost. I have to underline the term actual cost because they have given me actual information on that particular table. So I can see the actual cost. I can see the direct materials purchased. 36,000 kilograms, which cost us 90,000. Then we have got direct wages. We have variable production overheads. Note 2. The output during the period was 3,500 units of product Y. Note 3. The standard production units were budgeted at 4,800 units. Note 4. The standard cost data per unit is as follows. You could scroll a little bit. The standard, please underline for me if you have your past papers there, they have given us the standard cost data per unit, which is as follows. So they have given us information there. So we have labor records show 6,200 hours were worked and the 600 hours were recorded as idle time due to machine breakdown. Required, they want us to give them the direct material cost, price, and the usage variance. Ladies and gentlemen, there is something that I would want to do right away here, because I appreciate the fact that most of us may not be having the past paper. So we have here the standard cost card. Anytime they want me to measure variances, I have to look at the standard cost card. It has to be there. The standard is our yardstick. It is the one that we shall be using, ladies and gentlemen, to evaluate performance. So the standard cost card, they have given us materials. Please go to the standard cost card, the one that is given on note number 4. Note number 4. Note number 4. Note number 4, if you could scroll a little bit, you'll be able to see the standard cost card, of which I'm interested in only 2 things for now. For now, I can see the materials from the standard card. I can see into brackets here, shillings 50 per kilogram, whose total parameter is giving us shillings 500. The total here is shillings 500. The total is shillings 500. And then the other thing that I would want to pick immediately is the labor from the standard cost card given in note number 4. We can see the labor. Labor is the same as wages. Labor cost is the same as wages. So labor or wages, we are able to see how many hours. 2 hours. 2 hours, which were able to cost us 600. Were able to cost us 600. Now for today, I would want us to calculate the materials and what here, the labor. So you would rather have me just having the 2 items alone. After that, let's go to the next thing. The next thing, of course, for us to be able to measure variances, we need the actual information. Actual information, and I only need 2 things. I only need 2 things in the actual information. If you look at the question, from note number 1, they have given us the actual, the materials which were purchased. The materials which were purchased, they were 3,600 kilograms. 3,600 kilograms. 3,600 kilograms. 3,600 kilograms, giving us a total of 1,890,000 shillings. Now, from there, ladies and gentlemen, we pick the second item. I can see the actual labor cost. The actual labor cost or the actual wages. In brackets, they have given me the actual number of hours. The actual number of hours was 6,800 hours. 6,800 hours. 6,800 hours, which gave us 22. Which gave us 22, 10 what year? 1,000. Which gave us 22, 10,000. And then there is a very important rider down there. If you scroll a little bit down there, you'll be able to see where they're telling us that labor records show that 6,200 hours were worked. And then 600 hours were recorded as idle. Remember, in total, the number of hours in this case here was 6,000 what year? 800. But out of the 6,800, we only worked 6,200 hours. 6,200 hours here were worked, as the other remaining hours here, which was 600, were left, or rather were what here? Idle. So that if you add the 2, you'll end up getting what here? 6,800. You'll end up getting 6,800. Now, I don't want to touch on the overheads as of now. If time allows, we'll be able to touch on them. But for now, I want good students to go to the questions. If you go to the questions, ladies and gentlemen, what will you be able to see? The first thing that they want us to do in the requirement, if we scroll down a little bit there, in the requirement, the first thing they want us to do is to give them the direct material cost. We have the material price, and then we have the material usage variance. The first one that I'll compute between the 3 is the material price. So please come and give us the material price variance. And I would want to see whether our students at RCM are able to compute these material price variances or other variance very fast. Material price variance very fast. Let's see. I'm waiting for that very good student who will be the first to give us, the material price variance, I'm still waiting for the answer. 90,000? From who? Ah, there are so many of them who have gotten this. Okay, so when we talk of material price variation, ladies and gentlemen, I know the formula, even from the just definition of the MPV. We know that MPV, material price difference, two prices. So we have the standard price minus the actual price. And then outside here, we have the actual quantity that was done what year, that was purchased. Thank you very much. So please, if you are doing this for the very first time, write there that our SP is the standard price per kilogram. At times it could be per liter, depending on the type of materials we've been given. But for now, we have kilograms. So this is standard price per what? Per kilogram. Meaning that for us to be able to get the standard price per kilogram, simply we shall drift our eyes towards the standard cost card. This is the standard cost card. And I can see the standard price given here for each kilogram is 50. So here we have 50 minus the actual price. So for the actual price, I'll have to throw my eyes to the actual information where I can see that we procured 3,600 kilograms and each kilogram was costing, or rather, all the kilograms cost this. All the kilograms cost 1890. All the kilograms cost 1890,000 divided by 3,600 because I'm interested in cost per kilogram, the actual price per kilogram. You can even have it here. Actual price per kilogram will be the total cost, actual cost, divided by the actual number of kilograms here. I don't even have to divide it. I don't have to divide it. Come outside here, ladies and gentlemen. What do we have? The actual number of kilograms, the actual quantity, actual number of kilograms, ladies and gentlemen. We can see from the actual information here. Actual information here, we purchased 3,600 like that. So I'll get my calculator. Talk of 50 minus 1890,000 divided by 3,600. I'm able to get a negative 475. When I get a negative, it means that this figure is bigger than this. If it's bigger, the actual price is bigger than what we had set. It means, ladies and gentlemen, that profit, in terms of profits, we bled. Life was not very good for us because we had set to buy our materials for 50, but we ended up paying more. So times 3,600, I'm able to see. No, we have to repeat this again. We are talking over 50 minus 1890,000 divided by 3,600. Yes, times the actual quantity which was what here? 3,600. What figure were they getting? No, they have to repeat again. Is that answer correct, really? 90,000 advance. Because you see, they're saying here, no. Okay, I know that is a mistake. Let's see here, 90,000 divided by 3,600. Ladies and gentlemen, I can see something here that the actual price is supposed to be, from this question, the actual price is supposed to be 525. It's supposed to be 525. And therefore, there is no way the standard can be what here, 50. So it means that the person who typed this question for me made a mistake. The person who typed this question for me made a mistake. And that is why some students who have the past paper have been able to tell us here that this is supposed to be shillings what here, 500. I'm being told it's supposed to be shillings 500. The students who have this past paper, is that true? The students who have this past paper, do we have 500 here, somebody? Is it 500 or 50? Somebody, just go to the comments there. We see the students, ladies and gentlemen, who have these past papers. What figure do we have here? Is it 500 or 50? The standard price. Is there somebody who has been able to confirm to us? The ones who have our past papers, is it supposed to be 500 or 50? I'm waiting because most of us don't have past papers. It's 500. Somebody is confirming that from the past paper, this figure here is supposed to be 500. Thank you very much. So put 500 there. 500 there. So that in terms of comparison, and it will make sense, because the actual price here is 525. If you look at the actual price is 1890, ladies and gentlemen, 1,000 divided by 3,600. The actual price is 525. And yet, we had budgeted to use how much? 500 shillings. So 500 minus 525, we are not any better. We are worse off. Why? Because we had planned to use a maximum of 500 to procure these goods, these materials. But at the end of the day, we overshot our budget. We went through the roof in terms of what here, our actual price. So meaning that at the end of the day, the variance we shall get will be adverse. So whatever we get, so we have here 500 minus 90,000 divided by 3,600 equals times 3,600, which gives us 90,000 negative. So that is 90. You can't say negative 90,000, negative 90,000. No. The negative will be taken care of what is the word adverse. So 90,000 adverse, 90,000 adverse, 90,000 adverse. There is a student who is saying that my question has another problem. We shall be reaching there, don't worry. We shall be reaching there. So material price variance, first of all, I would want to know whether we are together, whether we got this answer, all of us. Ladies and gentlemen, from there, if you allow me, I will take you to what we call the material usage variance. So material usage variance. What do we have as our material usage variance formula? Remember, usage variance is a quantity variance. The quantity we thought we would have, ladies and gentlemen, used. The quantity we thought we would have used versus the quantity that we actually used. So here we have our usage variance is standard quantity minus actual quantity. And then, of course, after writing this, we'll recognize the fact that find this will be a variance, but in terms of kilograms. So we need to monetize these. So how do we monetize this, ladies and gentlemen? To monetize these, what I need to do is to come and multiply this with what here, the standard price. One thing you're going to realize as we get along, if we have money outside here, money has to be what here, standard. Money will be standard. But if it is quantity which is outside or hours, they have to be actual. Actual. So what am I saying? And this is something production. And then we have our AQ. Our AQ is the actual quantity that was used. AQ is actual quantity that was used. Actual quantity that was used. Actual quantity that was used. And then, of course, SP stands for standard price per kilogram. Standard price per kilogram. And I would want to give you exactly 1 minute, for you to get this answer correctly. And this ball, I'm straight away throwing it to the CPA section 2, students who are doing MA. So I would want one of my students of section 2 to do proper substitutions here and give us an answer for the material usage variance, exactly 1 minute. So remember, variances is a straightforward topic. Once I get a paper, it doesn't matter whether it's a management accounting paper or an AMA paper, I'll straight away look through all the questions, and I will pinpoint the variances. And once I see it, that is the question that I will start with. Free section 2, then congratulations, you must be a very good student. You deserve a present. You deserve a present. You deserve a present. You deserve a present. Ladies and gentlemen, listen and listen to me very well. This capital SQ stands for standard quantity of materials for the actual number of units here that were done what? That were produced. Meaning that there is no way you will be able to get this capital SQ if you do not know how many units of the finished product were produced. Is there somebody who is able to see anywhere in this question the actual production? Please scroll down a little bit. The actual production. The actual output. Note number 2. The actual output was how many units there, somebody? 3,500 units. The actual output was 3,500 units. So what I need is to know the standard quantity we need. The standard quantity we want to work with to produce one whole unit. Please go to your standard information. Standard information, I want to know the number of kilograms we need here. Number of kilograms we need here. Number of kilograms we need there. To make a unit which will consume 500 in terms of material cost. In terms of material cost. Ladies and gentlemen, fortunately, they have given us a rate. They have told us in the standard card that shillings 500 equals what here? 1 kilogram. Equals 1 kilogram. And our unit, ladies and gentlemen, is taking exactly 500. Assuming it was taking 1,000, it was consuming 1,000 shillings in terms of materials, one finished unit, then I would have said that we need how many kilograms? 2. But here, our product, to make our product, needs what here? Shillings 500. So if you cross multiply, you realize that the standard quantity in these is still 1 kilogram. So I will come and take here 1 kilogram times the actual output. Because capital SQ has to reflect the actual number of units that were produced. SQ, capital SQ. Whenever you see capital SQ, capital SH, these parameters, there must be the actual number of units that were produced. And of course, from the question here, ladies and gentlemen, from the question there, we were told, that the actual, that is not number 2, the actual output was 3,500. 3,500 units. Minus the actual quantity. I always get students confusing here, and that is why I like writing there AQ used, actual quantity used. Once they talk of actual quantity, the word actual tells me to come and look at the actual information, where I'm able to see that the actual materials we used were 3,600. Multiplied by the standard price per kilogram. So again, throw your eyes to the standard. In the standard, you should be able to see the price of 1 kilogram. The price of a kilogram, ladies and gentlemen, here we are told is how much here? The price of a kilogram is 500, like that. Now, were things really good for us? According to what we had budgeted to utilize 3,500 kilograms only, but we ended up using more. So just like, for example, you have a house like this. Once you want to do a bigger house like this that has got like 4 or 5 floors, ladies and gentlemen, a skyscraper, you need a quantity surveyor. So the quantity surveyor will come and tell you, hey, for you to be able to do this entire house, I project you need 1,000 bags of cement. Fine. And then now you go to the stage of actualization. So you put a contractor on site. The contractor starts working on your house. And at the end of it all, he comes and tells you, I've finished the entire house and I used more number of bags of cement than you had set. Perhaps I used 1,200. That is poor performance. That is bad performance. It is what we are calling adverse. So ladies and gentlemen, this is 1 times 3,500 minus 3,600 times 5,000. This is what made those students here to talk about what here? 50,000. A for what here? Adverse, because the answer we have gotten here is minus. And here automatically I have to warn you in CASNEB, I've marked for CASNEB for so long. If we get you writing minus 50,000 adverse, we give you a wrong. Even if we don't give you a wrong, your final answer, because at the end of the day, this examiner of section 5 and an examiner of section 2 would want you to do an operating or a reconciliation statement. So even if we as examiners, we decide to look the other way in terms of the minus you've put in here, your final reconciliation statements will not agree. Statement will not agree. So it is you to know. There is no way you as an accountant, you can go to a congregation where you are presenting financial statements and then you say, you know what? Kenya Airways made a loss of negative 20 billion. It made a loss of negative 20. People will laugh at you because the moment you've used the word loss, you've taken care of the negative. The same case here, the moment I've used the word adverse, I've taken care of what here? The negative. Ladies and gentlemen, a student of CPA who wants to get an award, reads a question severally. This question wanted us to do 3 things. Number 1, the price. Number 2, we have the material usage. Number 3, they also wanted us to do something that so many students here would have forgotten. Number 3, they wanted us to give them the material what? Number 3, the third item I mean, in Roman 1, the material cost variance. So I would want to see, ladies and gentlemen, whether there is a student who will be able to get this material cost variance very fast. Yes. About the 36,000. Yes, ask it loudly. I hope our question doesn't have a problem, but from here we have here materials. How many kilograms? 3,600. 36. If you're able to see direct materials purchased from the actual. Is there somebody who has these past papers? At times they also make mistakes here and there. But now listen to me very carefully. That one we have to differ with them. Do you know why? Because if you are telling us, ladies and gentlemen, that our material usage variance is what? Our material usage variance is standard quantity minus actual quantity multiplied by what here somebody? Standard price. You can't tell me that you are budgeting to use 3,000, to use in this case here 3,500. The one times the output, 1 times the output, 1 times the output, 1 times the output, 1 times the output. Output there was 3,500. And then you tell me that the actual quantity which you used was what here? 36,000. For example, the architect has told you you're going to use 3,500 bags of cement, and then you end up using 36,000. I mean, that variance will be way too high. It's not practical. It's not practical. It's not practical. And that is why I would want us to cancel that zero. If there is a zero there, I would want you to cancel it so that we talk of what here, 3,600 what here? Kilograms. 3,600 kilograms. Let's cancel it right away. Now from there, ladies and gentlemen, we go to the next question that I've been able to pose to you. I would want to see where there is a student who will be able to compute for us the material cost variance. Is there somebody who has been able to compute for us the material cost variance? Remember, Zoom is supposed to be very interactive. Very interactive. A technology that you guys are able to use right away from your homes. During? Or the figure, fine, you're right. But you see, I've been, or rather, I've looked at these exams for so long. I know I'll be able to tell you this as a problem. So like now I know that is a big problem. In an exam, of course, you would have used 36,000 if they gave it to you that way. But now because you're in class, I have to tell you what is factual. There is no way you can plan to use, for example, 100 bags of cement and then you end up using only one. No, no, that variance is not practical. It's not practical. For the material cost variance. So material cost variance, they are getting 140,000 adverse. What is the name of the student who got it first? Sarah, Connie, Moses. All those are my students of section 5, isn't it? Is there a student there who is in section 2? Is there a student who has gotten it correct who is in section 2? Oh, okay. Now, ladies and gentlemen, there are two ways that you can make use of to get the material cost variance. To get the material cost variance, you could come and talk of material cost variance equals material price variance plus material usage variance. Plus material usage variance. Remember material cost variance, we started by saying that material cost variance has two components. We have the material price variance and the material usage variance. So the components put together should be able to give us the mother, which is what your material cost variance. So our material price variance, we had obtained it up there. It was 90,000 adverse, plus our material usage variance, which we got somewhere there, which is 50,000 what here adverse. And therefore, if you happen to add the two, you'll end up getting what here 140,000. 140,000 adverse. 140,000 adverse. 140,000 adverse. The other way of getting these, my great students, is to look at this. Say that material cost variance equals standard material cost. Standard material cost minus the actual material minus the actual material cost. Standard material cost minus the actual material cost. So once they make use of the word standard, it means that I'm going to make use of the actual output somewhere. Meaning that what I will do, I'll come and take the actual output that we had from this particular note, which spoke about the actual output. If you were to take me there, there's a note which has the actual output, a note which has the actual output, that is note number 2. The actual output was 3,500. So this is 3,500. I would want its standard material cost. I would want the material cost for this. So I need to know how much does it cost me to produce 1 unit. To produce 1 unit in terms of materials, I need this 500. So times 500 minus the actual material cost. The actual material cost, what do we have here, my good students here? The actual material cost, we have here 18 what here? 90,000. The actual material cost, we have 18, 90,000. 90,000. So could you kindly subtract for us? Could you kindly subtract for us? So when you subtract, what figures are we getting here? Somebody. Is there somebody who has been able to get us a figure? So talk of 3,500. 3,500 times 500 minus 90,000. Are you able to see negative 140,000? So if it's negative 140,000, then we should talk of 140,000 what year? 140,000 advance. And this value, of course, I know it rings a bell somewhere. It rings a bell somewhere. It rings a bell somewhere. Any question before I move to labor cost variances? Labor cost variance. Apart from that little error, little bump, which have been able to hit so well and moved on. Is there anybody who has a question that you would want to pose to the audience? Fortunately, for any question you throw there, the entire audience is able to see. Not unless you want to do a private message to us, but we really don't advocate for private messages. Just put it on the platform. When you put it there, you are serving the interests of so many students who are not willing to talk. So is there somebody who has a question? So can I continue if there is no question? Can I continue? Yes or no? Can I continue? Yes, Justin. Yes, thank you very much. Now, ladies and gentlemen, I would want us to go straight away to the labor. So mention there the labor cost variances. Labor cost variances. Labor cost variances. And then you tell us LCV. Labor cost variance is LCV. That labor cost variance has two components. Generally, labor cost variance has how many components? Two of them. Two of them. Labor cost variance has two components. Full colon there. Number one, we have the labor rate variance. Number one, we have the labor rate variance. Number two, we have the labor efficiency variance. Labor rate variance and the labor efficiency variance. So I would want to see whether there are students who are able to remember the formula of labor rate variance. Let's see. Labor rate variance equals who? Labor rate variance. Let's see. Labor rate variance equals who? This is not something that really will bother me, because from the name rate variance, I will know the two parameters you're subtracting. I will know them. I will know them. Is there somebody who is able to see them the way I'm able to see them? Labor rate variance equals who? Labor rate variance equals who? Lillian, eh? Very good. Thank you very much. Normally, we prefer starting with the variance itself. That is correct, but we prefer starting with the variance itself. So the variance here will be SR minus what here, somebody? AR, the rate variance. And then, of course, the moment I get the variance per hour, I will come and multiply outside there with what here? Actual hours. Outside there, we multiply with actual hours. Please write there in full that this capital SR is the standard rate per hour. Capital SR is the standard rate per hour. Capital SR is standard rate per hour. Capital AR is actual rate per hour. AR is actual rate per hour. And then we have AH being the actual what here? Actual hours. AH is the actual hours. AH is the actual hours. AH is the actual hours. Actual hours. So ladies and gentlemen, I would want us to pick this up very first. So I want us to get the labor rate variance. Is there somebody who is able to see the standard rate per hour? Look at the information given. They have given us, this is a standard up here, by the way, which are deleted. The standard. So they have given me labor or wages 2 hours for 600. So then out of this information, can somebody tell me what is the standard rate per hour? Can somebody tell us what is the standard rate per hour? What is the standard rate per hour? Can somebody tell us what is the standard rate per hour? Is there somebody who has been able to give us a comment there? 300. Thank you very much, Lillian. Lillian has seen that 2 hours are costing us what here? 600. How about 1 hour? So 1 hour will be 600 divided by 2, which gives us 300. How about the actual rate? What do I need to get the actual rate? Throw your eyes to the actual rate. Actual rate, actual information is here. Actual rate, I'm able to see wages 6,800 hours. We bought them 6,800 hours at this total cost. At this total cost. And therefore, the actual rate per hour will be 2210,000 divided by 6,800. 2210,000 divided by 6,800. Who is able to give us that answer? Moses says 325 is the rate that we ended up paying our workers at. 325 is the rate we ended up paying our workers at. What have we done to get the actual rate? We've come down here and we appreciated the fact that our actual rate is rate per hour. The actual rate per hour, in this case here, we took the actual wages we paid, we spread them out into the hours, we divided it by 6,800. Now, coming outside here, I want you guys to give me the actual hours. So now we have got actual hours, 2 types of actual hours. We have got 2 types of actual hours. Which actual hours should we use here? Should we use the actual hours that we paid? Remember, these are actual hours which we paid. We paid for 6,800 hours. But some of these workers went around idling. So we have got 6,800 hours were paid, but they actually worked for how many hours? If you remember from that particular note, if you could take me there, to that note, my admin, if you could take me to that note, ladies and gentlemen, you'll be able to see a place on note number 5, where they're telling us that we only worked for 6,200 hours, note number 5. 600 hours in this case here being the hours that were wasted away, idling around. So now the question that I would want to pose to all of you, Section 2 and Section 5 students in Kenya, including the ones who are following us on Facebook, which actual hours should we use, ladies and gentlemen? Should they be actual hours paid or actual hours worked? Actual hours paid or actual hours worked? Please talk to me this evening. What are they saying? Should we use actual hours paid up there or actual hours worked? Most of them are saying worked, but remember the way they tell us that the way to hell is quite wide. The way to hell is wider than the way to heaven. Ladies and gentlemen, we only make use of actual hours paid while computing the labor rate what year? Variance. So actual hours paid, if I were you, I would have written this somewhere in my mother tongue. Somewhere in my mother tongue. In my mother tongue. That these actual hours paid that you are seeing here, we only use them in one area alone while computing one type of variance alone, which is the labor rate whatever, the labor rate variance. Nowhere else. All the other parameters, all the other variances which need actual hours, we normally use the actual hours worked. So in short, as a chorus, we are saying that actual hours paid are only used while computing the labor rate variance only. The labor rate variance only. When computing the labor rate variance only. So here we are, times the actual hours paid, which were 6,000 what here? 800, which was 6,800. So ladies and gentlemen, could you kindly come and give us this figure? So we have 300 minus 325 equals times 6,800, which equals what here? Somebody who is able to give us an answer there? Who is able to give us an answer? I want to hear answers from my students because as usual, we have to give a present. Is there somebody who was able to get 170,000 adverse? Moses, yes. Moses got 170,000 adverse. 170,000 adverse. Is that okay? Calvin, thank you very much. Sarah, thank you very much. Thank you very much. Thank you very much. Now, having gotten labor rate variance because of time, I'll straight away go to labor efficiency variance. How efficient are we in terms of managing our workers? How efficient are we in terms of productivity? So who remembers the formula of labor efficiency variance? This is something that anybody I've ever taught before knows, that I've got only one friend from the Indian community, Mr. Shah. Mr. Shah, anytime we talk of efficiency, always remember that it is the Shah community, which is efficient in terms of how they run their businesses. Those of you normally work for our brothers and sisters coming from India, of course Kenyans of Indian origin, you know how efficient they are. And that is why I got a friend of mine some time back telling me that Indians, they don't pay very well. But the experience you will get out of working for them is above board. And I agree. Those guys are very good. They are very efficient. So anytime we talk of labor efficiency variance, remember my friend, Mr. Who? Shah. And then outside we'll come and put what we call SR. Don't forget that Shah, SH, is standard hours for actual production. Right there, that SH is standard hours for what year? For actual production. SH is standard hours for actual production. Very interesting. You know, if there is a paper that is quite nice, even in terms of timing, the examiner, it's management accounting, it's advanced management accounting. Those two, any management accounting discipline is the easiest, So ladies and gentlemen, come right away and give us our SHA, standard hours for actual production. Actual production has to be used here. So the actual production you guys gave me, 3,500. Times now the standard hours. Look at your standard card. The standard hours here were how many? 2. Minus the actual hours done what? Worked. Minus the actual hours which were worked. Actual hours which were worked. Minus the actual hours that were worked. How many hours here did we actually work? 6,000 what here? 200. 6,200. Multiplied by the standard rate. The standard rate per hour. Multiplied by the standard rate per hour. The standard rate from up here, my students were able to give me a standard rate of 300. My students were able to give me a standard rate of 300. A standard rate of 300. So open brackets there, what do we have? 3,500 times the standard hours minus 6,200, close brackets equals times 300. What figure are we able to get? Somewhere 240,000? 240,000 positive, which happens to give us what here? A favorable variance. Which happens to give us a favorable variance. A favorable variance. Having gotten labor efficiency variance, here because there is a difference. Are they getting that figure? Okay. AH is not 68. No. Remember 6,800 we said we normally use AH paid when you are getting labor rate variance only. Otherwise, in all our subsequent computations, like when we go to the variable overhead efficiency, when we go to the fixed overhead efficiency, whenever we need hours, we shall only be using actual hours that were worked. We want to measure how efficient our employees were while working, not while idling. So therefore, the actual hours, please write here for efficiency variance. Thank you very much. For actual hours, the actual hours here we should work with the actual hours that were done what here? Worked there. Any other question? Now, because of a disparity between the actual hours worked and the actual hours paid, we have a difference of 600 hours. 600 hours, we need to calculate idle time variance. We need to get what we call idle time variance. We need to come and give them the idle time variance. So you mentioned there idle time variance. So to get idle time variance, idle time variance, ladies and gentlemen, idle time variance, this is very easy. You will take idle time times SR. That time which you paid your workers, but you never got a commensurate production from them. They never worked for you, but you gave them. Perhaps wakana kusengenyana, ama kama hapa tumambo machine iliharibika, but you are still paying them. So you take that idle time, which you guys have been able to give me a figure of what here? 600. So I'll take 600 multiplied by the standard rate, which you guys gave me 300 there. So then we'll talk over 600, ladies and gentlemen, times 300, which will end up giving us 100 what here? 80,000. 180,000. Now you need to advise me, is this figure favorable or adverse? Is the figure favorable or adverse? Some are saying adverse, others are saying favorable, isn't it? Moses says adverse. Calvin adverse. These students are bright. Actually, I even don't know what I'm doing here. I'm just wasting their time and my time as well. They never really needed this simple class. They have known that even if the figure is positive, there is no way idle time variance can ever be favorable. I mean, who would be happy paying workers who are not working at all? So here we are supposed to talk of what here? Somebody adverse. And therefore, the total labor cost variance, don't even go for the formula. The total labor cost variance, you simply come and add the 3. You add the 3. So we have here 170,000. I can see there is a favorable somewhere, so I need to put the negative. So we have negative 170,000. Favorable is positive 240,000. And then the next one is adverse, minus 180,000. When I'm punching these figures in my calculator, I have to recognize the signs there. Equals, which gives me 110,000. So when I'm writing down, I'll write this as 110,000. What they are? Adverse. 110,000 adverse. 110,000 adverse. And now that automatically marks the end of this particular session. In our tomorrow's session, which I'll also want to give it to you for free, I'll be able to cover the variable overhead and I'll be able to cover the fixed what year overhead. I'm doing these particular free classes courtesy of our CPA section 2, our CPA section 5, who came and joined our Zoom classes a little bit late. They have been very supportive to RCM online classes. And because they came in a little bit late, now I'm trying to do kind of a make up for them. So I want to take this opportunity to just thank you for joining our Zoom classes. Remember, our classes are going on. We can't stop our classes. If you had what the CEO said the other day, CEO Krasnip, in his webinar, he said, whether we like it or not, exams will be there. What they're trying to do is to look for big space to ensure that these students, as they do their exams, they will be able to observe this social distancing concept. So exams will be there. And that is why we are really encouraging you to study hard. We have a very good platform for you here to really get these things, where all the subjects here, right from ATD1 to CPA section 6, we are charging them per lesson. How much? Shillings what year? 100. Shillings 100 per lesson. And then if you can afford, please also work with our materials, work with our revision kits. RCM publishes revision kits. If you want to buy, want a copy for yourself here, you simply buy it from us at 1,000 shillings. 1,000 Kenya shillings, you'll be able to get this particular book. And then most importantly, join our WhatsApp groups. For you to join our WhatsApp groups, what you need to do is to send us a WhatsApp message and tell us the paper you are interested in. And then we'll be able to add you to the respective WhatsApp group. So 0719 725 525. 0719 525 1000 is our WhatsApp number. Otherwise, thank you very much. I would want to receive some feedback from you regarding this particular class. How was our class? And of course, parting shot, ensure that you register with us. with our online with us in our online classes, buy our books, and make this particular program popular by bringing in all your friends. Thank you very much. Bye-bye. We're waiting for your feedback. I would have wanted to continue, but there is a class, Section 3 FR class, which is supposed to begin at 6:30. We are 9 minutes shy from 6:30. 9 minutes shy, 9 minutes away from 6:30. I would have wanted to continue, but tomorrow, the same time, we shall be together, the same time. But remember, I can only be able to support these free classes, giving you free classes, if you're also supporting us with, or rather by bringing in students to come and buy our products, so that also you as well, at the end of the day, we want to convert you to become our student. Otherwise, ingie usome. Asante sana.